TRE, Talk Radio Europe.
The Daily. I need the Daily. You got the Daily with Dave Hodgson.
Welcome back to the show, and I'm delighted to introduce to you Jonathan Davies. Jonathan is an economist and has been on great programmes like Panorama, BBC One News, 6 o'clock, 10 o'clock News, Channel 4, ITV News. I've been on the Today programme on Radio 4, Jeremy Vine, Stephen Nolan, and now the Dave Hodgson Show here in Spain. Good afternoon, how are you?
Good afternoon, the great Dave Hodgson.
Thank you, Jonathan. I mean, it's amazing what's happening at the moment. You must be in quite a lot of demand with what's going on in the Eurozone at the moment, I should imagine. Is that the case?
Demand, funnily enough, is the operative word. What they're trying to do is create demand so that people and companies go out and buy stuff. Well, they cannot create demand by borrowing more, because no one's got any money. We're up to here in debt. The government's up to here in debt. Households are up to here in debt. They're obviously massively negative equity on all those houses and apartments and villas that they bought over the last 10 years. And businesses are not employing anyone. So there is no demand, and there won't be any demand. Thus, the economic position is dire. To compound it worse by raising taxes is just beyond inane and nonsensical.
I was just going to ask you about it, because obviously we've seen the bailout coming in, and well, it actually hasn't come in yet, but the conditions are starting to arrive as well with that bailout. How much can the Spanish public take? When it comes to suddenly we're seeing our electricity bills go up, we're seeing our utility bills going up as well. Cost of living is rising, and now we're seeing the VAT rise as well. There is no bottomless pit when it comes to personal finances, and how can you grow an economy when the finances aren't there in the first place to be spent?
Well, absolutely, and let's go back to the big picture here. Over 30 or so years, there's just been an explosion of debt in the West. Since the euro in the end of 1999, when Germany and France said that they wanted lower interest rates, and Spain joined the euro at interest rates which were far, far too low for their economy, because their businessmen said, we want lower interest rates. What did it do? It created a borrowing explosion, which created the biggest economic party in history, which of course eventually all parties come to an end. Nat King Cole sang about it. The party's over. Now we've got the biggest economic hangover in history, and it's not going to last a short period. It's going to last for years, if not decades, and that's what your listeners need to get to grips with. You asked the question, how much more can the Spanish take? Well, I just wrote to clients recently that I expect within 5 or 10 years that either or all of Greece, Spain and Portugal will no longer be democracies within that length of time.
Wow.
Because clearly you can't take much more. And yet, and may I remind your listeners of Einstein's definition of insanity, if you continue to do over and over and over again and yet expect a different outcome, these politicians and these central bankers, they should be put in a padded cell and thrown away the key, because it's totally insane to continue going down the same route month after month, year after year, and expecting that you can get a different response. I refer you and your listeners to Japan. Then, in the 1980s, the country that was going to take over the world, many of your listeners will recall, in 1989, it peaked. And it's been going down since 1989, 2.5 decades practically, and they're still in depression. And what is it they're doing? They're bailing out the banks. They're printing money. They're building bridges to nowhere. Does it remind you of anything?
Yes.
It's exactly what we're doing in the West. That's why I say we're in a 20 to 30 year depression, until they absolutely radically change their policies.
Is it a case that I think one BBC reporter said, I'm not sure who it was, said that it gave the idea of somebody kicking a can down the road. It's become quite popular. But is that what the Euro leaders are doing at the moment? Almost like they're holding back the problems for a while, but it's going to come back again and bite us. Because I said to somebody yesterday on the radio that if the Spanish families haven't got money to spend in the shops, the economy doesn't grow, we'll be asking for a bailout this time next year, will we not?
Look, absolutely. So there's a number of points there, but absolutely. Of course they've been kicking the can down the road. They've been doing that. In fact, since 2008, they've been kicking that can. Of course, the funny thing is we're now down the road by 4 years, but they're still doing it. And the politicians, from whatever side, whether it's the left or the right, ultimately, they're all the same. In terms of the big picture, they all want to do the same things. They all want to bail out the banks. They all want to increase spending. They don't want to accept the hard reality that is simply sitting in front of their noses, that for 10 years, in Spain in particular, there was an explosion of borrowing and spending. In other words, the Keynesians, from John Maynard Keynes, that side of the economics argument, the Keynesians said, borrow and spend when times get difficult. Well, the thing is, what he also said was, but only do it whilst the markets allow it. The point is, the markets are no longer allowing it. That's why the rate of interest that the Spanish government borrows at has gone through the stratosphere, and that's why instead of borrowing from the markets, Spain and Greece and Portugal and Ireland and Uncle Tom Cobley are now borrowing from the European Central Bank, which basically means Germany. The point is, there's a finite amount of money that Germans have, that German taxpayers are prepared to hand over to southern European states. One of these days, the politicians will finally get it. They will stop kicking the can down the line. The problem is, that will be after, and it's already been the case for a few years, tens of millions of folk across Europe and indeed across the world are being in abject penury and poverty and difficulty and lack of social care, lack of health service, lack of police provision, you name it, and that those idiot governments have sold off their prized possessions. Here in Greece, they're now selling off their islands at 10 pence in the pound. Well, it's just insanity. Unfortunately, the politicians, as I say, whether it's left or right, they continue to do this because actually it's politically untenable to accept the hard reality. But one of these days, a politician is going to stand up in the main square in Madrid and he's going to hold a piece of paper, the Maastricht Treaty, and he's going to that set the euro, and he's going to say, if you elect me, I will rip this up and we will come away from the euro. Do you know what? He or she will get elected.
Well, I was going to say that, I mean, even before the euro crash and the crisis took place, even years ago, the Spanish were saying we want the peseta back. So it won't take much, would it, for a party who is actually, as you say, most of them are preaching from the same hymn sheet, aren't they, at the moment? But it wouldn't take much for somebody to stand up and say, enough's enough, we're going to pull out of Europe, vote for us. And
well, absolutely. It started to happen. In Greece, we've seen Syriza get 20% of the vote. I don't actually know what the numbers of such politicians are in Spain. And indeed, there's a strangely named party called the Pirates Party. In Finland, they're getting 20% of the vote. They're up to 10% nearly in Germany. Of course, the UK Independence Party is doing extremely well in the United Kingdom. The problem is that the mainstream media, you mentioned the BBC, for example, the newspapers, the central bankers, the merchant bankers, all the current mainstream politicians, in other words, they all want the status quo. So it's very, very difficult for those with an alternative viewpoint to actually get any airtime. So therefore, it's very difficult for people to vote for them.
As far as you yourself get airtime on some of the major channels, are you given any conditions on what you can and can't say? And, because obviously, some of this stuff what we're even saying now is pretty controversial and obviously isn't towing the party line when it comes to politics. So how much is the freedom in some of the mainstream channels, would you say?
Yeah, that's a very good question. I'd want to answer the comment on this. First of all, it's interesting and accurate that you say that what I say is controversial. And yet, if you talk to anyone in the public, they tend to say, yes, that's what needs to happen. But it's only controversial amongst the people who've got power, who've got influence. The answer to your question is no. It's never said to me, you need to stick to this angle. And I can assure you, if ever it was, and I disagreed with the angle, I'd just say, well, fine, go to find someone else. Yeah. But I'll tell you this. As I say, there are basically two schools of economic thought. There's the Keynesian school that what's happening is what is Keynesian, and there's what's called the Austrian school, because the founding fathers indeed came from Austria pre-war. They fled the Holocaust. And the Austrian school foresaw all of this happening. In the 1990s, the Austrians were saying there's going to be a debt explosion and the biggest crash you could ever imagine. The problem is no one listened to them. And even though the likes of they don't say to me, you have to say this or you have to say that. What actually happens is I don't actually get very much airtime. You mentioned some of the things that I'm on, and it's true. If any of your British listeners think of any newspaper or radio station or TV station or channel or program, I've probably been on it. But for every time that the likes of I have been on it, I tell you, the Keynesians, the bankers, the politicians, the central bankers have been on 99 times. That's unfortunately the harsh reality.
Just going back to this, what we're seeing at the moment, the bailout here in Spain, are they pandering to the bond market? So I asked that because I heard yesterday on the radio that obviously we want to see the percentage come down from the dangerous 7% for the bonds. But the currency exchange rates have stayed the same. If not, the pound has grown actually stronger against the euro, even in the news of a Spanish bailout.
Okay. What is the bond market? The bond market are the international lenders, like the banks, the hedge funds, the pension funds, who lend money to, in this case, governments, for an agreed length of time at an agreed interest rate, and then at the end of the term they get their money back. That is a loan. Now, Spain is now paying 6.5% or so to borrow over 10 years. You mentioned the magical 7% number. The thing you have to realise, though, Dave, is that Spain would be borrowing at 20-odd or 30-odd% were it not borrowing from Germany via the European Central Bank. That's the only reason why the interest rate that Spain borrows at is as low as it is. If it was borrowing on the world markets, it would be basically out of the market. It wouldn't be able to borrow because, of course, a country, you think about it, a first world developed democracy borrowing at 20 or 30%, it would be untenable, financially untenable. And it has, in effect, been locked out of the private markets, the banking markets. That's why it's borrowing from the European Central Bank, the lender of last resort, as they say. The thing is, as the ECB, as Mario Draghi, ex-Goldman Sachs, the chairman of the European Central Bank, as he prints as much as he possibly can. Earlier this year, he and his cohort printed 1,000 billion euros and handed it to the banks at an extremely low rate of interest to bail out the banks yet again. As he does so, what in fact it happens to the currency of the euro, it falls in value. That's why, as you mentioned, the euro is now weaker against sterling than it had been. It's tremendously weaker against the US dollar. In fact, it's lost circa 20% of its value against the dollar since a year ago. As it does so, as the currency falls, what does that do to businesses in Europe and to people living in Europe? You talk about the high cost of living. Clearly, everyone imports oil, so if your currency goes down, the cost of oil goes up. Thus, the cost of travelling goes up. The cost of heating and lighting goes up. The costs of running businesses go up. The cost of food even goes up because it has to be transported. The cost of living are soaring because of what central bankers and politicians are doing, time after time, printing more money, giving it to the bankers, increasing the cost of living and lowering the standard of living for every person, man, woman and child in Europe and indeed in Spain in particular. That's why I say they're doing the same thing over and over again, expecting a different result. Will not get one. What they'll get is the same as Japan, which is now in its third decade of depression. Instead, they should accept the hard reality, let the banks go bust, instead of just handing them hundreds of billions of euros every few months. And that way, we'll stop borrowing, we'll raise the value of the currency, we can actually improve our standard of living.
What would you say, and I've said this before to different people, what would you say if the government was to say, let the banks go bust and we will guarantee those who've got savings in those in their bank accounts, we will guarantee them the money, instead of putting it into the banks, we could put it into people's pockets, and they will then in turn be able to, there'll be new banks that will come up behind maybe, but allow the banks to go bust?
Yes, well, in effect, we're starting to discuss what is capitalism, because I can assure you and your listeners, we have not had capitalism in Europe, in America, in the developed world for nigh on 50 or 60 years. Capitalism involves allowing failed businesses to go under, a bit like if any of your listeners are horticulturalists, think of a small flower garden. If you don't weed away the bad plants, you don't let the good flowers to blossom. And as you say, let the failed banks fail, because, you know, their reckless decision to lend 200,000 euros on a flat which in reality was worth 50,000. It was their decision. You may say, well, people shouldn't have borrowed it. Well, it's true. Yeah. But the fact is, as you well know, from the adverts over many years, the banks were pushing money down people's throats. So yes, let the banks fail. It will mean that the governments are borrowing less, which means eventually the value of the currency will rise, and that in itself will reduce the cost of living and the cost of running businesses. And on the other side, as you quite rightly say, if you let the bad businesses go under, then the businesses which are less affected by the downturn because they weren't reckless in the first place, they will have an opportunity to grow. Yeah. And that is capitalism.
Yes, yes. Right, we've got a few minutes. What would you like to see happen now? I've given you free reign now over Europe. What would you like to see happen now in order for us to get that? And the reason why I say you're right. Since 2008, we've been in this situation, and politicians, regardless of whether they were to blame in the first place, have had plenty of time to get us moving on. But it isn't happening. What would you do?
Yep. Well, I would be looking at the likes of Estonia and Iceland, who, particularly in Iceland's case, they told the banks where to go. They are now prosecuting politicians and bankers for evidently defrauding the system, self-evidently. And what they are now doing is balancing the books. They're not continuing to keep spending up and borrowing. Instead, they are spending what they've got, as opposed to what they haven't got, which is what politicians have been doing, making promises to people for decades that they can provide better care, better services, better this, but without raising taxes. Of course, the only way they've been able to achieve that is by borrowing. So we should be looking at those countries who are actually achieving it. Iceland is now one of the fastest growing economies on the planet, when I can tell you all the press was saying in 2008 that Iceland was going to go into, pardon the pun, an economic ice age. Well, that's exactly what didn't happen. So we should stop bailing out the banks. We should let them fail. We should cut public sector spending. We should aggressively, as opposed to in the small way that we're doing it, you know, the implication in what I hear in the media is that there's massive public sector spending cuts, and there are. But the problem is they're not in the right ways. We should cut public sector spending whilst at the same time cut borrowing to bail out the banks. We should also split the city banks from the high street banks. At the moment, all the investment banks own most of the retail banking. So anytime you deposit 100 euros in your high street bank, do you know what? It goes straight into the casino. So split the high street banks from the city. And also, we should move taxes from wealth generation, in other words, income tax and corporation tax on businesses, to property. That is a way whereby entrepreneurs will have incentive to move forward, but governments will still receive the same amount of revenue. In a nutshell, those are a few things that I think they should do, but it won't happen because it's politically untenable.
Jonathan, I want to thank you for coming on today and giving us your insight, and it really is it's good having people like you around, because a lot of us, we hear the jargon on the news, we hear it on the TV, and it doesn't always compute as to really what's going on for the average lay person on the street to really comprehend what's going on. And we need people like you to come along and say this is what the issue is. So Jonathan, I want to thank you for popping on and coming on today, and we'll try and speak to you again in the next few weeks at some point maybe. But Jonathan Davis, again, thanks very much and have a great afternoon.
My great pleasure. Thank you, Dave. Bye-bye.
Cheers, Jonathan. Bye-bye now.